Good day, ladies and gentlemen. Today I want to teach you a strategy that works every time. In fact, it is also called the no loss formula. Okay, so this is not specific to forex. It can be used on any asset class. All right, it all depends on your broker. Most brokers don't allow this. Okay, because it's more like you are using an hedging strategy. Okay, so basically, I just want to give you the basics of what the strategy entails. All right, so let's dive right into it. The very first thing you need to understand is that you are going to have three different levels. Okay, this is like your first level, your level number 1, your level number 2, and your level number 3. Now your level number 1 and level 3 has to be the same number of pips, absolutely no difference. The only thing that will be different will be your level number 2, and whatever you have in your level number 2, 3 times of it is what you're going to have for your level number 1 and your level number 3. Everything I just explained now might not be clear, but just listen to this next line. This will help you understand. So let's say you have 30 pips in between this level. Okay, 30 pips. So 30 pips is what you have for your middle boundary, which is what I call your level 2. If you have 30 pips here, it simply implies that 3 times of that is what you have for your level 1 and level 3. So you simply displace 90 pips here, 90 pips, okay, and this will also be a displacement of 90 pips. Okay, so you are going to have 90 pips downwards from this line, 90 pips upwards from this upper line. Okay, while in between the two lines you're going to have 30 pips. All right, so basically that's just the very first thing you need to know. Now what will you be doing for the upper boundary? This middle boundary is the most important for you, because that's where the game really is. Okay, so this is what you do. At the top you'll be placing buy trades targeting this particular level, while at the bottom you'll be placing sell trades targeting this particular level. And don't forget, this is 90 and this is 90. Okay, so I'll give you an idea. And for this particular strategy, the way you do it is the take profit position is also the stop loss position. This is what I mean. When you're selling, this is for sales. When you're selling, your stop loss SL is going to be where the take profit of the buy would be. So your SL when you're selling is going to be exactly at the same level as your take profit for buying. In the same vein, when you are buying, you place your TP for buying here. The stop loss for buying is going to be at the TP level of your selling position. Okay, so vice versa. So take profit and stop loss will be at the same points. Where this is going to be your take profit for your buying, at that same level you are going to have your stop loss for selling, while this will be your take profits for selling. At that same level you have your stop loss for buying. So it's like a combo. You are trying to manipulate the market, you understand? So this, once you have that figured out, the next thing you would need to know is an explanation of what exactly you are trying to do. So let's say you came to the charts and this is exactly where price was, and based on your analysis, okay, you feel price is going to go up. So you take a buy trade here targeting 90 pips, for example. It doesn't have to be 90. Just know that whatever you make your boundary, 3 times of it is what you should target. So your boundary, if your boundary is 20 pips, then you should be targeting 60 pips. Okay, so if your boundary is 10 pips, you should be targeting 30 pips. It just has to be 3 times what your middle boundary is. Okay, so that one is not set in stone. It just has to be 3 times. So don't think because I'm using 90. So now you enter a buy trade right here. This is where current price action is, for example, and you're trying to target 90 pips. Okay, trying to target 90 pips, but instead of price to actually go up based on your analysis, price started coming down. Okay, so based on the particular markets you are trading, you already have an idea of the kind of expansion you could possibly expect. Okay, maybe during the day for that particular asset class, you already know it will always move up to 100 pips. If it doesn't move that much, then what you should make your middle range should be a little bit smaller. So if it's an asset that moves maybe 50 pips in a day, then your middle boundary should be probably 15 pips or 10 pips. Okay, so by the time this is 15 pips, your displacements or what you should be targeting will be 3 times of that. 3 times 15 is 45. 45 plus the 15 pips, that gives you 60. So it's not even enough. So if it's 50 pips expansion you expect for your assets, then your middle range should be maybe 10 pips. Okay, so if it is 10 pips, then your target will be 30 pips. So it contains the expansion you would expect. So I'm giving you an idea of how you are going to calculate your middle range. So now, based on the scenario I'm explaining, you were targeting 90 pips here, and market started moving down. Now you are in a drawdown. Your account is showing negative. You are in a drawdown. You are not in profit. So you can just say, okay, I know this particular this particular asset moves about maybe 130, 150 pips. Okay, so let me just make this 30 pips boundary. What you now do is 30 pips away from this level where you bought, you are going to place a sell trade. Okay, you place a pending order to sell at this level. Okay, so that pending order to sell, its own take profit is going to be 90 pips away also. Okay, its take profit will be 90 pips. Now the difference between this sell trade you placed and this buy trade you placed is that the buy trade, let's say you place the buy trade with a 1.0 lot size, this sell trade will be slightly higher. You can place the sell trade with let's say for example's sake, let's just use 2.0. okay, let's use 2.0 so that to be clearer. I don't want to start using 1.4, 1.3, though it's going to work, but I want you to see it in a very clearer manner. Okay, so it won't be confusing. You understand what we are trying to do, but you don't have to always double. You can use 1.4. It just has to be slightly higher than what you have here. Okay, then when you do your calculation, you should always end in profit. So now look at what happened. Price came down from here and triggered your sell trade here. Okay, so it triggered the sell trade at this point. Now for it to have gotten to this bottom part, it means the buy trade will be on minus $30. Okay, the buy trade is going to be on minus $30, but your sell trade, which you opened with 2.0, is now running. Okay, it has been activated, and look at what happened. Price later came down, played around, then came down to do what? Came down to eat your take profits. Okay, right here. All right, so price eats your take profits right there. So what is the calculation for that? The calculation for that is simple. Remember, you entered your sell trade with right here with a lot size of 2.0, and the pips from here to here is 90. So what that implies is that your profits for your sell trade is going to be plus $180 because it's 2.0 lot size that you entered, and it covered 90 pips. So that's 180 lot size. I'm just using it as an example. Okay, while the one that you entered with 1.0 and it covered it went through a loss of 30 pips, then it still moved all the way to 90 pips. That's a combination of 90 and 30. That's 120. But since it's 1.0 lot size, what you would have lost will be $120. Okay, so you have a minus, a negative $120 and a positive $180. By the time you do the plus and minus, you would notice that you are going to end up in with $60 profit. Okay, hope it's clear. So basically that's just the idea behind it. All right, so I think this should not even be 1.0. okay, it's supposed to be like 0.1. if 90 pips should be $90 if it's 0.1. so hope that is clear. think that's just a little mistake, but you understand, you get the gist of what I'm trying to explain. Okay, so in the scenario whereby after you've entered your buy trade here to move up, and then it moves down and triggers your pending order to sell, and then instead of moving down to this target, it moves up again and starts moving towards this. So what you do is, if it starts moving up again, you need to place a pending order to buy right here. Now your pending order to buy can be maybe 2.0 or 1.5. What you're trying to do at that point is, you want a situation whereby your total buy should be higher than your sell. So you've entered a 1.0 buy before. Your 1.0 buy plus your 2.0 buy is going to give you 3.0, okay, in terms of the lot size. While your 2.0 sell, which was supposed to come down, but now price is moving up, your 2.0 sell is going to have a loss of 30 plus 90, a loss of 120 pips. So at the end of the day, if price later touched the take profit position for the buy, what you will have is a 3.0 buy. So you have 3 times 90 pips, okay, 3 times 90 pips, let's say that was going to give you $270, okay, plus 270, okay, plus $270 is what you have, while the sell trade is going to be 2.0 lot size multiplied by 120 pips that is covered. So that should give you about 240. Do you see that? So this is going to be negative $240. So at the end of the day, you'll be left with 270 minus 240. That leaves you with $30 profits. Okay, definitely you pay some commissions, maybe it's just going to be $20 or so in terms of the profit you actually make. So that's basically the idea. Okay, that's basically the idea. But this strategy, in as much as it look nice and mathematically it's making a lot of sense, it's actually a little bit, it's risky. Not even a little bit, it's a risky strategy. It's risky in the sense that if you fall into a consolidation period and market just keeps moving around your middle range, your account balance can just go, because you have to keep increasing lot sizes. It can just eat up your account balance completely. So it's a very risky strategy. That's why most traders don't actually use it. Okay, it's risky, but if you just keep doing it, definitely at some point price will come towards this point in the future, or towards this point. All right, so that's basically the idea behind this no loss formula. Okay, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.